Hi there, Shingirai here again with another update on portfolio performance over the past week. On a 1 week basis, 8 out of 10 of the CBAM portfolios outperformed their respective benchmarks in a relatively risk-on week. They would see returns ranging from CBAM 1 returning 1.34% up to CBAM 5 V2 returning 2.34%. We saw a bounce back from our heavily discounted European equity positions with an inherent growth bias, and you'd see that through Bailey Gifford European and Allianz Continental, as earnings have been relatively strong in the European reporting quarter. Then again, we see some strong performance from our JP Morgan Japan position on the back of Chinese optimism on reopening, and also just bringing exports back online in Japanese for Japanese companies, also supported by a weaker yen once again. In terms of detractors from performance, we saw a pullback for 91 global gold miners for the non-interest bearing commodity, and also we saw some weakness there for large cap US equity through the S&P 500, down 40 basis points on the week. In terms of quarter to date performance, 6 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from 1v2 returning 2.04% up to CBAM 5 returning 3.44%. We've seen some pullback again, comeback rather in performance from Pictet Clean Energy, delivering 11.18%. And again, that strength that we spoke about for the active European fund manager, Bailey Gifford, up 8.99%. Then some strength again, as I touched on earlier, from Japanese equities, up 8.86%. In terms of detractors from performance, we continue to see weakness from 91 global gold miners, down 8.76%. And then also some turnaround in performance there on a quarter to date from a Chinese equity position on the back of some concerns there on the property developer market and defaults from mortgage payers. And then also more recently the lockdown of the Wuhan district, again leading to a bit of a panic sell-off there for our Chinese equity positions. As of yesterday, we have made some quarterly rebalances to portfolios, and what we've done here is that we've introduced a total return fund in portfolios number 1 and 2, which would act as a diversifier, especially in this high interest rate environment. So we allocated away from UK corporate and US corporate bonds with the view of introducing a total return fund as a diversifier. Across the rest of the 5 portfolios, we also just corrected our UK mid-cap and unwound that position, and we used that allocation to correct our US underweight positions and then re-enter India and also allocate just a bit more to Japan.